can't take no loss.
Boom! We are live. What's up, everybody? Good morning. Welcome to the morning show on Stock Market TV. Spencer Israel here. I've got Steve Straza. I've got JC Perez. We've got charts on charts on charts. A lot going on today. Brian Shannon will be our guest at 9 o'clock. We'll have our resident expert day trader, Kimmy, on right after that. So we got a lot going on, a lot to get to, a lot of stocks, a lot of charts. Let's roll the intro. Whoever's in charge of that. Oh, wait, that's me. Hello, gentlemen.
We're doing it.
We're doing it. This is
our show.
This is our first one of these.
I like it. It's almost like we've done it before. It's almost kind of like we've been doing this for many, many years now. We're just calling it something else. And Spencer's here too.
Yeah, I'm here just to make things more complicated for everybody. But yes, this is the morning show, our new daily 90-minute show where we run through what's moving, we rip through charts, talk to some of our friends, and take questions from the chat. Do a little bit of everything here. So,
by the way, can we talk about Straza's jacket? That thing is sweet, man.
That is nice. That is nice, Straza.
You were giving me a tough time about my clothes yesterday. Yeah, I didn't even get to show you this yet.
Wow.
You know what? His jacket matches the wall almost.
Well, the wall's green. It's more of a teal.
All right.
More of a teal. You people from New Jersey, you guys don't know teals. It's a South Florida thing.
All right,
check out the back.
Wow. That is hilarious.
Oh, that's funny. That's good.
Where does one find something like that is what I'm curious about.
A strange trendy bar on South Beach, and I couldn't leave it there.
Yeah, that sounds right. That sounds right. All right. So Spencer, how does this work? What are we doing? What are we doing first?
What are we doing? We're doing our first segment of the day where we talk about what is moving in the pre-market session. So let's do that right now. Story of the day right now is Target. We've got a chart up. Let's get that chart up on the screen. There we go. And earnings this morning, and there really was not a lot. Actually, there wasn't anything to like, frankly. Everything they said was bad or below estimates. They missed on EPS. Their guidance was light. Their comps was light. Everything was bad. That's what's happening in the pre-market session.
Except the stock is up.
The stock is up. The stock is up.
Which is the only part of that whole equation that actually matters. Let's remember.
So I actually see a slight beat on EPS, miss on the top line. I have some comments here if you want me to read through them. So their guidance was lowered. They are seeing Q2 adjusted EPS 130 to 170 versus estimates of 191. That's no good. Some commentary. Sales grew at 0.5%. Flat comp sales combined with the benefit of sales from new locations. Traffic up 0.9%, but it was 3.9% same quarter last year. Right. Comp store sales grew 0.7%.
So both the volume of sales and then the amount, the transaction amount per sale, both came in lower year over year. So less total sales and less dollars being spent per sale, which is interesting because, inflation. So, but this is what we discussed yesterday, right? Was it with Straza, I think, me and you on the spaces, where something's got to give, right? People still need food, but they don't need Target per se. So
we had this chart of Target.
It's a bad business. Look at Walmart. It's a million times better. Are you kidding me? There's no reason, doesn't even matter. I mean, when you look at Target, you look at Walmart, it's night and day. Why wouldn't you just buy the better one?
I think that dual pane chart of Target and Walmart, says a lot about this. Whether it's the whole narrative that Walmart is more staple-ish while Target is more discretionary-ish, or one's just doing things right while the other one's not. But you got Target trading on lows here, missing earnings. Walmart trading towards highs. And doing far better. When does their report hit? Is that this afternoon or did it already come out, Walmart?
Oh, Walmart. Good question. You're throwing me under the bus here. I should know this, shouldn't I?
Here's the chart that Straz is talking about if you want to share that.
Oh, yeah. I got you. No, JC, your charts aren't shared.
Oh, here, hold on.
Yep.
See,
Boom.
we are new, a little bit new to this, right? We are a little bit new to this.
You want to go full screen on that bad boy or no?
Oh, we're going, baby. We're going. Let's go. Here it is. Throw that bad boy up there. There it is.
Yeah.
How come
Same-
we're not getting the whole thing?
Can you go present mode
It
slideshow?
is present mode.
Oh really?
Yeah.
Oh wait. Oh that's wait. That's I was sharing.
Oh, you were
Straz's
saying
screen.
mine. I threw mine too.
JC, you're not sharing your screen, my man.
I know I wasn't because I thought that it was my mistake, but it was human error, Spencer's error.
No. It's your mistake.
Slideshow mode now, boys.
Let's go. Let's go.
All right, there
we're
it
on
is.
mode. We're on
There
live
it
mode.
is. There it is. All right.
Yeah, I mean, look, night and day. Look at Walmart pushing up against new all-time highs. Look at Target pushing down against near multi-year lows. And, you know, whether they came out with good news, quote-unquote good news, or quote-unquote bad news, I don't really care. Stocks up this morning, but it's a mess. I think the answer is you look at Walmart instead.
What do you do in this situation, JC? You want to get cute and try to buy the laggard for a catch-up trade, or you just use the leader?
Absolutely not. I'd rather get a root canal than buy Target.
All right.
Yeah, no thanks. All right. So what else? What else?
Just to answer Straz's question, Walmart is tomorrow morning. Tomorrow's Thursday, right? Tomorrow morning. Okay.
Yeah.
So this is really like the big retail week, right? Just like we have big tech week, we start with the big banks week, every earnings quarter. Now this is kind of retail week or consumer week.
I have a request. I have a request for the morning show. Next time we're in one of these situations, we invite Jeff Mackey on to talk about this, right? I'd rather hear Jeff Mackey's take than Straz's.
Totally.
Respectful to you, Straza.
I want his take too. He's
right,
a
cool.
retail god.
Cool.
He knows all this stuff. So
Market zero, Smokey.
All I know is the purple crayon.
It's true.
What else?
Yep.
All right. What else?
TJX was the other big report of the morning, and I had the numbers on my screen and they just froze on me, so I apologize. But I know we have that chart. Where's our chart master? There it is.
So this is another leader. You know, TJ Maxx, Q1 fiscal year 24 results above plan. Profit margin 10.3%, EPS 76 cents, overall comp store sales growth of 3%, and Marmaxx comp store sales growth of 5%. Marmaxx, interesting. I love that name. It's because they took Marshalls and TJ Maxx and mushed them together. So their parent company is called Marmaxx. Fun fact. But anyway, EPS beat by 5 cents and revenue missed, but just slightly by about 40 million.
JC, thoughts on the chart?
Looks great. If we're above the 2021 highs, I think you can own it. That 77 level is the one. I mean, listen, for me, it's more of like a family hedge. My wife spends so much money at this freaking store that if I own the stock, you know, it's kind of like a hedge against the expenses there. So, you know, it's a personal thing. You know how you talk about how no one trade is right for everybody. If your wife is not spending as much money on TJ Maxx as my wife, then maybe you don't need a hedge like that. But mine, my wife is out of control. So I like to trade long above 77.
I like what they do. I spend a lot of time there too. I'll have to talk to Morgan about it.
I have to talk to Morgan about that. All right. Morgan getting a shout out on the first show.
All right. This is sort of an interesting show, right? Because it's not every day that JC is coming off of one of his big investor calls or subscriber calls, which you had last night, JC. So let's go into our macro summary, state of the markets, and you can sort of maybe highlight some charts that were discussed last night and talk about some highlights of that. Sound good?
I have a
let's do it.
Before we go, I have a confession to make.
Dude.
DC, did you notice who was missing at last night's call?
Who was missing?
Yeah, who was missing?
You?
You decided to compete with the Elon Musk interview on CNBC.
You know that they record that. You can watch it later, and they'll snip out the best part, so you don't have to sit through the whole thing, right? you know that's how it works.
All right, state of the market.
Play the tune.
We got JC's thing here. It's the chart here somewhere.
All right, this is a little segment that we like to call State of the Markets, and you know, we're looking at some individuals' charts here. I think we should start with the S&P 500. This is the boy of them all. And what are we seeing here? we are seeing the S&P 500 really just trading in a sideways range. And when people are like, well, JC, how can we be in a bull market if the S&P 500 has been in a sideways range? And my simple answer tends to be that the S&P 500 is not the stock market. The S&P 500 is one index in one country with one size of company with a ton of growth exposure, right? It doesn't mean that there's anything wrong with the S&P 500, but I think it's important to remember that that's what it is, right? So look at the S&P. Here you're looking at the a zoomed in look, right? We're gonna have to fix this because it keeps showing. Here we go. Let's see if we can hide that. There we go. This is a zoomed in look where you can see that support from early 2022 turning into resistance, and that blue line is the anchored VWAP. This is the anchored volume weighted average price from the all-time highs. And I'm showing that not just to give Brian Shannon a shout out. We generally do use this on a regular basis, but shout out Brian Shannon, who's going to be a guest on our show later today, in the episode. So we'll talk to him and see what he thinks about that. But that's what the S&P 500 looks like right now. And just bigger picture, I've got people telling me that this is how it's gonna work out. This is consensus, folks. This is what the market thinks it's going to happen, that the S&P 500 continues to fail up here near overhead supply, and we're going to head down towards 3,400. This is consensus. I spoke at the National Association of Active Investment Managers last week. At the beginning of my presentation, this is 100 or so financial advisors that are active managers, not passive advisors. I asked, raise your hand if you think we're in a bull market. Nobody raised their hand. Raise your hand if you think we're in a bear market. Everybody raises their hand. Raise your hand if you think the S&P 500 closes higher than where we are today at the end of the year. Nobody raises their hand. Raise your hand if you think we close lower at the end of the year. Everybody raises their hand. And I followed that by saying, well, everybody agrees with you, right? And I'm going to spend the next hour telling you why I think the opposite is going to happen. And then I proceeded to show a series of charts that showing stocks, rising generally over the last 10, 11 months or so, not falling. And when you ask the question, have the majority of stocks been going up over the last 10, 11 months? The answer is yes, which is the exact definition of a bull market. Now, one thing that I'd like to point out, and I want Straza and Spencer to chime in here after this, and we can kind of, because this is the state of the markets, but it doesn't have to be the JC show state of the market. So I'd love to hear you guys poke some holes and weigh in here. But before we get to that, I just wanted to show the Bollinger Band with, volatility has compressed so much. And what do we know about asset prices? We know asset prices trend, but we also know that historically volatility mean reverts. So when volatility comes down, here we're looking at the Bollinger Band bandwidth. So as volatility expands, by the way, volatility can expand with prices going up or down. But when volatility expands, these Bollinger Bands are widening. They tend to ultimately contract. And when they contract so much, they really can't contract anymore and they need to expand. Well, here you're seeing the Bollinger Band with down near lows, and you could see these blue circles in the S&P 500. And what transpired the last occasions that these Bollinger Band widths were so narrow, and they came just before bouts of higher volatility, right? And with that came lower stock prices. But when you zoom out, we were seeing lower stock prices because stocks were in a downtrend. When you look at Bollinger Band width and when that volatility would contract, when stocks were in an uptrend and the S&P 500 was rising, sure, we had an expansion in volatility, but that didn't necessarily mean that prices needed to decline. So I think that we do see a higher volatility event coming soon. I think that there's going to be a resolution out of this consolidation, which will most likely come with that higher volatility. It doesn't necessarily mean that it's going to resolve lower or higher. I think my bigger point is that expect a higher than average sized move. How do you feel about that, Straza?
Yeah, from contraction comes expansion. It's been a tight range for a while now. Like, to me, the most bullish thing about what the indexes are doing is they're correcting through time rather than price, right? Sticking up here on the upper bounds of their ranges. And while that's happening, right, while these indexes are looking resilient, we can look beneath the surface. I'm going to share my screen right now to some bases that look quite similar to the S&P that are already resolving higher, right? So here's technology with new highs breaking out of this base, making new 52-week highs. When you look at some of the largest components in the market, NVIDIA already resolved higher from a base. Here's the software index getting ready to go. Here's Microsoft. Apple's already done it. Here's Google. So I guess my point is, if all of the largest weightings and components of the S&P are going to resolve higher from these bases, I would imagine the S&P gets that done and resolves higher from its own base soon as well.
Why don't you pull up my chart here, Spencer, so you can see what the Nasdaq has been doing. We're seeing the Nasdaq 100 breaking out to new 9-month highs, right? And I just shared on Twitter. I was like, very quickly over the weekend, I was like, hey guys, tell me why this doesn't matter. That's all I said. I said, hey, tell me why this doesn't matter. I put that on Twitter, just like that. Shared the chart. I got hundreds and hundreds of replies, a lot of anger, things about like the Fed and recessions and things that have nothing to do with the Nasdaq 100, quite frankly. And just a lot of anger. And listen, I've been at this Twitter thing now for, 14, 15 years at this point. So I've experienced many cycles and consuming social media and sort of aggregating that sentiment. And rarely have I seen a situation where a chart and a simple statement of tell me why this doesn't matter creates so much rage and so much anger. So I think that the sentiment that we're seeing, not just anecdotally, by asking around here, I want to show quickly, not just anecdotally by asking around, but the data as well. When you look at the large speculators positioning, we are looking at some of the most aggressive short positions ever by hedge funds. And again, the large speculators aren't just hedge funds, but that's sort of how I want to think about it, think through it. These are big hedge funds, and they are very, very aggressively short. So I'll take the other side of that. And the other final point that I'd like to make is that a big pushback that we're getting is that it's only 5 stocks that are driving the market. And while the NASDAQ 100 is up 20% off of the lows last June, the equally weighted NASDAQ 100 is up 17%. So this is equally weighted. So by definition, no, it's not just 5 stocks. And then you go, well, JC, I'm not talking about since June. I'm talking about just this year. Well, just this year, you have hundreds of stocks, I think almost 400 stocks that are up over 20%. And those are New York Stock Exchange listed stocks. Yep. These aren't like crappy, meaningless names. By the way, Facebook doubled. So yes, the 5 big stocks are doing well, but it's not that that's weakening breadth. That just means that technology is a leadership group, as technology should be with falling rates. People are saying, oh, macro doesn't work anymore. No. Maybe your macro doesn't work, but macro is what's driving this. Why do you think technology and growth are doing so well? Because interest rates peaked in October, right, and continue to fall. Growth in tech should be doing well, and we're seeing that strength on an equally weighted basis. All right, that's my those are my thoughts on the state of the market. How'd I do? Not bad for the first timer, right?
I think it's great. I agree with you, and I would just add, it's not 5 stocks doing all the work, but these 5 stocks, when people say 5 stocks, they're talking about the biggest stocks, the mega cap stocks. If you're an index investor, you want those 5 stocks to lead, right? It's very important that they lead. And right now they are the outperformers. They're the clear leaders. And it's not a bad thing to see them kind of driving the gains at the index level. In fact, I would say it's a very good thing. And we're seeing plenty of participation under the surface from smaller names too. I continue to see more and more of these bases resolve higher.
It's a function of sector rotation. That's what it is. It's not about breadth. It's not a breadth indicator. It's really just a function of tech's leading. So the indexes with more tech are going to outperform. I mean, that's it.
Are you concerned about any of these short-term tops that we discussed yesterday on PTPA in the more cyclical and value groups?
Well, we're talking about these massive head and shoulders tops, but for it to be a head and shoulders reversal pattern, you need something to reverse. And there's not really a strong uptrend to reverse, right? So for me, a reversal pattern needs something to reverse, and there's nothing really there to reverse. So for me, it just looks like a massive sideways range. If we start to make new lows and things like that, then we could talk about, broader implications, particularly if financials break down. Yep. It's really how I look at it. Financials, breaking below 30 on the XLF. If we start to see that, then we can have a bigger conversation, but we haven't seen that at all. It's actually,
and you're right. When we zoom out on a lot of those short-term tops, you'll find that they are simply in prolonged ranges, multi-year ranges. industrials, metals and mining, all look very similar. So
Cool. All right, Spencer, what's next, baby?
What's next? We've got some earnings I want to cover real fast, but before I do that, I want to mention that the slides that JC was just sharing were from his conference call last night, right? And if you want to watch the conference call, it's recorded. If you want to watch the replay of it or get access to the slides, it's very easy to do. All you do is scan the QR code that's on the screen right now. That is a link to All-Star Charts Premium. And as a premium member, you will get access to JC's twice monthly conference calls, among many other things. But the conference call just happens to have been last night. So the full slide deck, the replay of the call is available after you scan that code. JC, how'd I do?
That was pretty good.
Okay.
You need some work, I think.
Okay.
Definitely need some work. But I just wanted to show quickly what it is that I was talking about. This is the financials chart. That's the big one, right? We start to break this. We start to see new lows back below the former highs from 2007, 2018, 2020. We start to lose those lows, which are last summer's lows around 30. I think that's the bigger problem. Straza just asked me about how I feel about some of these topping patterns and some of these value-oriented areas, like in materials and industrials. I would be looking at financials front and center. There's nothing more important than this. So if financials can stick the landing here, and hold above those 2007 highs, I think things are fine. I think nothing good is happening below those 07 highs.
All right, let's do a couple earnings real fast. We've got a few more in addition to Target and TJX, and then we'll get to our first guest of the day.
What do we got?
Let's start with everybody's favorite restaurant, Jack in the Box. We got the chart up on the screen right now, or at least we should. Jack reported this morning their earnings per share beat estimates, their sales beat estimates. They added more to their buyback, and they raised their guidance for the year. Everything looking great in Jack in the Box land. What does the chart tell you?
Looks like a nice base to me. I mean, we're seeing a lot of this stuff, right? I mean, to me, it's less about, the actual Jack in the Box. Like, do you ever see that skit with Jack Nicholson? And he's Jack in the Box. I want some freaking French fries. Have you seen that skit? It's pretty funny.
No.
Well, we'll have to show that on the next episode or next time Jack reports earnings. But the bottom line is we're seeing this pattern so much. Straza, how much does this pattern come up? Like this, big bottoming base, rounding bottom, not just in restaurant stocks, but we're seeing it in software stocks and a lot of growth stocks, just a lot of names, particularly those that got beat up from the beginning of 2021, kind of took 2022 to sort of put in that bottoming process and are now resolving higher. This pattern just comes up again and again and again. And if you want to punch up my screen quick, Spencer, you can see some of the other restaurants, looking very similar to this. Look at Chipotle, right? Take a look at Chipotle, very similar situation. Take a look at McDonald's, look at that base in McDonald's resolving higher. Yum Brands, new all-time highs. Wingstop, big base, new all-time highs. Wendy's, you're seeing that base again. Just restaurants in general looking to complete just sort of this monster base. So, when you talk about the consumer being dead, when you talk about, the consumer can't afford anything, I'm seeing casino stocks ripping. I'm seeing home construction stocks ripping. All these restaurant stocks are doing great. So the strongest sector on an equally weighted basis off the market lows last summer is consumer discretionary. Again, so I'm just, the narrative that suggests that the consumer's dead, the data suggests the exact opposite.
Yep, I agree. And just to speak to those bases, I mean, the charts that we want to be buying have those nice bases. Most of them were coming off some nasty downtrends from 21 and 22. So,
all right, here's an interesting base. Let's bring up the next one here. We got Wix.com, very different business than Jack in the Box here, but they reported earnings overnight. Earnings per share big beat on that, 91 cents versus a 14-cent estimate. Sales also beat as well. Their guidance came in above estimates. So shares should be up this morning. But look at that base.
Yeah, more work to do. Is this a software name?
Yeah, this is like DIY website hosting, right?
Yeah, 4.6 billion. Yep, more work to do. Really, I think you got those April highs from last year around 110.
All right, and then we're sort of on into the back end of earnings season now. So, Straza mentioned it's a big week for retail, and outside of that, there's really not a whole lot left. So the last one we have for the day here was Doximity Telehealth. They reported last night after the close. Earnings per share, slight beat. Sales, very, very slight beat. And they guided. What did they guide? They guided light. The revenue guidance was light for the quarter and for the year. So some light guidance for Doximity, and obviously his stock has been under pressure.
It does look a lot better than something like Teladoc, though.
Yeah.
These businesses in general, not for me. Not bullish. Do we have a chart we could throw up? I'll throw one up.
Of Teladoc? They all kind of look the same, don't they?
Yeah, Doximity down 7.5% here pre-market. I mean, this thing still hasn't resolved higher. To me, it's a no touch. Let it, down near that 200-day moving average. It's a no touch. Let this thing work itself out. Still got some dancing to do. Let's take a look at the chart report. I'm excited for the chart report segment.
All right, let's do it real fast because then we have Brian Shannon coming on in 2 minutes. So
nice.
Let's get the chart report up here.
Let's do it.
All right, allow me to share my screen here, and then if you don't know what the chart report is, it's our free daily note that goes out. Patrick Donawilla is the man, and he puts together this amazing summary of the best of Intuit every single day. And this is a must read for me. I know you guys read it as well. Did you have anything you wanted to highlight specifically? Because
I like the chart of the day. The chart of the day coming from Alfonso.
Yeah.
I like it. Technology making new highs here on a relative basis. To me, I think that's not talked about enough. You're seeing technology breaking out on both an absolute and relative basis. Shout out to the Fonz.
Yeah, Alfonso is one of our research guru behind the scenes. He makes everything go. This newsletter is fantastic. Honestly, if you don't even have to be on Twitter to find out what's on Twitter every day. And Patrick does all the work, the combing through the ditches for us, and it's fantastic. So I like anything that has historical context. Like this one was good, right? Debt ceiling obviously is in the news a lot. We may or may not default, or this or that and the other. I don't really care about that, but I like looking back at the last time this happened, right? So this one stuck out to me, right? Most of the damage was done in the markets after the debt ceiling thing was resolved in 2011, right after the shutdown there. So I like that one. Just want to note, if you want to get the chart report, easy peasy. Scan the QR code on your screen. It's right there, and it's free, and it's daily, and it's freaking awesome.
Does this thing actually work?
It should, although I have to admit I didn't test it. Does it work?
It's working.
Hey, look at that. All right.
Look at that. Pretty cool.
Pretty
nice.
cool.
Look at the technology using QR codes. Look at us.
Technology is
look at us. See,
it's a wonderful thing.
See, sign up for the chart report. How cool is that? All
right. It's time for the part of the show I've been most looking forward to. Every day we have one featured guest, friend of the show, friend of the program, where we bring them on and talk about whatever the heck it is they want to talk about. Today's guest is a great friend, Brian Shannon. You may know him as a trader, as an author. He's got a new book that's out that I'm sure we would like to talk about. And Anchored VWAP is the name of the book. Is Anchored VWAP the perfect combination of price, time, and volume? He's the founder of Alpha Trends. Let's get Mr. Brian Shannon on the show right now. Mr. Shannon, how we doing?
Hey, good morning. Doing well. Good to see you guys.
What's
Well-
up, Brian? Good to see you, buddy.
Likewise, it's looking good. Nice show you got going here. I think
Our
I'm gonna be a
first
regular.
guest. This is our first guest. How about that? Brian Shannon, shout out, pioneer in the technical analysis video space. Here we are, 18 years later, doing, right? I
Yeah,
started
it's been a
watching your
while.
YouTube
Sure.
videos in 2005. Check my math. What is that? Is that 18 years?
Sounds good.
Wow, you're old, man.
This is true.
How's London?
London was fun. I'd never been to London. I had a really good time.
Brian, I know you have charts. If you want to share them, you just on the bottom of the screen there's that little screen share button, and you can
Okay, let me
share
be,
whatever you've got. And last time we saw Brian was at the launch, his book party launch a couple of weeks ago down Stone Street, which was fantastic. And I want to mention that again. The name of the book is Maximum Trading Gains with
There you
Anchored
go.
VWAP. Here we go. We got charts. Oh, we got charts. I see charts.
Oh, you
I
can
have
see
a
it? Great.
question. I have a question. Brian,
please.
can you just quickly explain to the audience who might not be familiar with what a volume weighted average price is? Give the folks the elevator speech on what it is and why it matters.
Yeah, sure. It's basically like the dollar cost average, really, if you think about it. If you were to buy, $1,000 worth of the Qs every single month, or it's every single transaction. Here, I've got it measured from the peak that we saw in 2021. So if I want to know what's the average price that the Qs traded at since that level, I anchor to that point. So you can see that, starting from there, we saw that sellers showed up a couple times. Now we've kind of battled with it for about a 4-week period, and we're back above that. So we're above that volume weighted average price anchored to this peak up here. It says the average long participant is now making money. So all of those buy the dip buyers, on average are now making money. All the shorts on average from that peak on average are losing money. That means the buyers are in control. We can say that with 100% conviction. Doesn't mean it's going to stay that way, but from this point through all of this trading in that bear market, and if they didn't scare you out, they wore you out, the buyers we know for a fact are in control.
So, Brian, would you use basically like the AVWAP from those highs the same way as maybe somebody would use like a long-term moving average, right? Because we got above the 200-day maybe a few weeks ago, but still weren't above that AVWAP. So you're waiting to see that to tell you, okay, the trend is shifting to up at the index level.
A lot of people look for these definitives like, hey, we're in a bull market again. To me, it's all about what's going on under the surface and looking at the stocks that are leading the way and trying to be involved in those trends. You look at Google, same story. We broke out past some resistance right in here and that anchored volume weighted average price from the all-time high. Now, prior to that, though, we had constructive action on the shorter term daily time frame. So people look at it. I think that's a common thing with technical analysis. People look for these absolutes. Are we in a bull market? Or are we in a bear market? To me, the labels mean nothing. Are we in an environment where I can make money on average on the long side trade? And to me, it's, I know you guys are, big top down people. It's all about bottom up, stock picking first. There's always a good idea on the long side or the short side. I'm looking at OLN as, I'm short this one a little bit. Looking at maybe shorting Tesla. It's gapping up here a little bit today. But going back to some of these VWAPs, that's the anchored volume weighted average price since the earnings report. So since that earnings report, the buyers have maintained control. If it can break below here, then I want to short that with a stop somewhere up on here. Here's the anchor from this high. Here's the anchor from this low. And put all these pieces of the puzzle together on multiple time frames to get my advantage for my time frame, which is a swing trader.
And how do you navigate, it's earnings season, right? So you just talked about Tesla. I know they just had their report. They just had their meeting last night. Musk gave a big interview. You don't stay away from something like that, or maybe now like the dust is kind of settled, all those events are behind us. Now you'll participate. Basically, would you want to participate in that stock ahead of those events?
Well, I'm in the no, I don't. I don't want to, the day before earnings, I had nothing to do with this stock. Let other people make those risky bets. Let the dust settle, as you said. And now, we're kind of pinching between the anchored volume weighted average price here from the beginning of the year and then from the peak up here. But the buyers are in control since that earnings report. So we have, as always, multiple trends and different stories being told. But if it breaks below here, now the average long from the earnings report is losing money. The average short is making money. So the shorts will most likely press. And I want to get short in there, put my stop somewhere up in here. And if it drops, then I'll make decent money. And if it doesn't, I get stopped out with a loss, small loss. But it's always about, using the multiple timeframes together and looking at these longer term bases of stocks that are ready to maybe make multi-year moves. These types of stocks that have these longer term bases, shares of, Micron are on the cusp of maybe breaking some important resistance. And they are above that anchored volume, or they're fighting the anchored volume weighted average price from that high. So these are the stocks that I'm interested in. Globe, the nice longer term base, maybe getting ready for a bigger uptrend. And those are what I look for, and really time it with multiple time frames to get in there at, hopefully the precise moment when they start to move. And, I talk about the market a lot, but realistically, it doesn't mean a lot to me unless I'm trading the cues. And if I trade the cues, it's got nothing to do with what I see on the weekly time frame. I'm down on a 10-minute, 5-minute, maybe even a 2-minute time frame. So, that's my world.
All right, let me take a step back. Let me take a step back here for a second. So I love what you said before. It's not about if it's a bull market or a bear market. It's about trying to weigh the evidence to figure out if, the way I like to put it, should we be spending more time looking for stocks to buy, or should we be spending more time looking for stocks to sell? That's how I look at it, right? In bull markets, you want to be spending more time looking for stocks to buy. Longs historically are rewarded in bull markets, and sellers are rewarded in bear markets. That's how I look at it. And then you can decide what time frame is best for you. So that's how I approach it. I also love the fact that you talked about how it's a bottoms up approach. We do a lot of top down work here, a lot of macro work here. But at the end of the day, it's a market of stocks, right? And that bottoms up approach, the just go chart by chart and count how many are going up and how many are going down, is so valuable. Like, yes, the percentage of stocks above their 200-day moving average, the advanced decline line, the new highs list, like all that is great to aggregate and get the totals. But that takes 2 seconds to do. Any idiot could go look at that chart. The real value, and there's nothing wrong with doing that stuff, but I think the real value is in doing the sum of the parts analysis. So with that said, can you talk to me a little bit about what kind of breath work investors can do using the anchored VWAP? Like, for example, the percentage of stocks in the S&P 500 above their anchored VWAP from the all-time highs in the S&P, things like that. Have you dabbled with that at all?
I have the ability on my software to do it only on an intraday basis. I can go back and in the cues, for instance, go to, which chart is it? Sorry for all the jumping around there. So this is the cues, for instance. Wrong
2-minute
one.
chart. Whew.
Where is it? So I can do it on an intraday basis. I don't know where that chart went. Anyways, sorry for all that jumping around.
Because you know how like when we're looking at the SPY, right? You could look at the SPY and where price is on the S&P 500 ETF relative to its anchored VWAP from all-time highs, right? And we could look at what the index ETF is doing and whether the average long is profitable or not, like you discussed before. But when you take all 500 stocks and say what percentage of longs within the S&P 500 are profitable versus not profitable, that's some stuff that I'd like to play around with and then start to do.
I think it's great. And, there's so many ways of using the anchored volume weighted average price. I wrote a book that outlined, a handful of those strategies, but you can take it in, 100 different directions, just like any other, valuable indicator. This one is most important because it's the objective supply and demand. I use it, like I said, on an intraday basis. Let's say we see the market gap down, 1%. But 10 minutes into the day, we've got 400 S&P stocks above the daily volume weighted average price, and the S&P is above the volume weighted average price, but we're still down $1. What tells me for today, the buyers are in control. I don't care about, if it's down from yesterday's close. This is about today's opportunities and where's the money flowing right here, right now. How do I use that to an advantage to maybe even time into a bigger trend? If we gap down to yesterday's volume weighted average price, things like that. There's just so many different ways, JC, to use it. And I think, your shop, you guys got the Optima, and they've got the ability to, I think, do a lot of these things. I know that, Matthew's excited about, creating new things with the Anchored View app there. So I'm handing you the torch to go solve that one.
Well, here's what I'm going to do. Here's what I'm going to do, because I'm going to let you get your time to talk about your new book. But I am old school, all right? And I like the OG first Brian Shannon book, Technical Analysis Using Multiple Time Frames. I encourage, and I'm going to give you your time for your new book. But I want to, Godfather 1, Back to the Future 1, right? The OG. Gotta give love, everybody's all, caught up on like the new hotness and Brian's new book. But let's not forget that original book, Technical Analysis Using Multiple Time Frames, I think every investor should use it, because it doesn't matter what your time horizon is, whether you're a longer term investor, a day trader, somewhere in between. These principles apply to all traders and investors of all time frames. Literally, the name of the book is Technical Analysis Using Multiple Time Frames. So I just wanted to give you a shout out to the OG book, and then I'll let you take it and tell everybody how great the new one is.
It provides a really nice foundation for the sequel.
I appreciate that, JC. I wrote that book in 2008, and it's kind of stood the test of time because it's about cyclical analysis and using multiple timeframes. This book, in the back of the book, I wrote a little appendix that kind of gets you caught up on that sort of thing. But, the same thing with the anchored volume weighted average price. We can look at anchors from, years ago and still find value. The anchor from the COVID low was something I had been looking at for quite a while. Now we're well above that. That's the beauty of it. That's the beauty of all technical analysis, the fractal nature. What works on one time frame works on another time frame. And we don't have to listen to people's projections about, hey, I'm bullish or bearish. It doesn't matter. What's my trade? Where am I positioned? And a lot of people just, they get so one time frame dimensional, they forget there's other time frames. And that's where people start arguing on Twitter and saying, well, I'm bullish, well, I'm bearish, whatever. It doesn't matter. We're here to make money. Do that on your time frame and tune out the noise.
Love it. Drop the link, Spencer, where people can get Brian's book. I highly encourage it. We all have our copy. A lot of our good buddies all have our copy. So thank you for that, Brian. Appreciate it. But we got to make sure everybody else gets it too.
Thanks for having me on, and congratulations on the inaugural show. I know this thing's going to be a huge success. So thanks for having me on the first one. I'm honored.
We need to take a snapshot of this shot right now and have Brian Shannon sign it. It's going to be worth a lot of money. This is like, you're like the Willie Mays, you're like the Hank Aaron of this thing,
Well, I want the other 3 signatures on there as well. It's
all right, deal.
It was an easy decision for us, Brian. JC and I were like, who's going to be the first guest? It's got to be Brian Shannon.
Yeah, because we wanted it to be somebody that's meaningful, that's inspired both of us, which you are. Somebody who we're friends with, so if we screw it up, you're not going to be offended by it. Somebody who,
that was the most important thing, actually.
No, somebody who's good, somebody who can speak eloquently and speak to something that's more complicated and make it simple. So you just checked off all the boxes, Brian,
There we go.
All right. I dropped a link to the book in the chat. Brian Shannon, Alpha Trends. Thanks a lot, sir.
It'll be in the show notes too on the YouTube.
It'll be in the notes.
Thanks, Brian.
Thanks, Brian. Adios.
Bye.
All right. So the plan for this show was that every day we would have like one featured guest right at 9 a.m., but then a couple of recurring guests, right, that come on the show several times a week or possibly even every day. And that's the deal with our next guest, Kimmy Sokoloff. She runs the Day Trader Pro service here with us, and she is a beast, and she's trading every single day. And we thought, well, Kimmy's trading in her room every day for with her people. Why not bring her on our show for like 5 minutes before she goes on her other show, right, to just tell us what she's watching. And I thought that made sense. And I see her here right now. So let's get Kimmy on the show. Kimmy Sokolov, welcome to
Hey guys.
welcome to the jungle.
What's up, Kimmy?
Welcome. What's up?
We see her. She's on camera.
I exist.
Listen, one thing I know for sure about Kimmy is she definitely exists. I used to run into Kimmy. She'd be walking her dog. I'd be at the bar right around the corner from her apartment in New York City. So Kimmy most definitely exists. Another thing I want to talk about Kimmy is Kimmy's track record. I listen, I've been doing this for a couple of decades now. I've met a lot of people. I've met a lot of great traders. I have never, Kimmy, and I tell you this and you laugh and you kind of, I have never seen somebody with a hit rate like yours. I got to check the stats, somewhere in the 70s. I mean, you are just knocking the cover off the ball. You had a nice day yesterday. Good for you, Kimmy. How'd you get so good? How'd you get so good at that?
Trial and error. A lot of pain, JC. A lot of learning.
Let's get right into it. What are you seeing? What are you seeing out there?
What am I seeing? Well, yesterday, we had a nice couple of great 4 or 5 trades in there yesterday. Traded AMD. It went well. I'm always quick to take profits, but I always tell the room, hey, you could stay with the trade. You could sell partial, keep a tail on. It's always up to them. Sometimes, I'll grab something for $1 and move on. Today, I'm watching Snow. I'd like it above 173.30. I want to see it really push for potential move to 175 and then 177. I'm looking at that. I am watching. So we traded AMD yesterday. NVIDIA started to get going. I want to see how it handles the 294 level. Let me check out NVIDIA. I want to see how it handles the 294 level. And I think it could have a date with 300. So I'm going to watch that. Okay.
And let's talk. Can you tell me about the overall market? Like, are you approaching? I know you're long and short, right?
I am long and short.
Long and short. But what are you seeing from the overall market that's going to dictate whether you're leaning more long or more short this week?
You know what it is? It's very hard. I mean, we keep bumping to like 413 on the SPYs, and then we keep dropping down to 410. Maybe with the debt ceiling, they come to a conclusion and they'll make the market pop the SPYs up to 415, which we have a gap up there. And then maybe we push through to 417 to 418, but it's really hard to say. We're such range bound so I'm taking my trades and whatever it is right now. Right. So it's really hard to see which way we're going to go. You could see, we're just dancing around these levels. We will break out or break down one way or the other, but maybe the debt ceiling will push it. You had a lot of Fed speakers this week, like 14 of them. We're at a couple Monday, Tuesday. So
they talk too much, Kimmy. Why are they always talking so much?
It drives me crazy. I'm like, oh my God, could they stop? I don't even like talking that much.
So I didn't get your note this morning because we were busy. This is our first inaugural show. So thank you for being here. Really appreciate it. Any shorts you're looking at right now?
Right this second on the short side. Not right now, but that's
Kimmy's leaning long. Kimmy's leaning long. I like it. Let's go.
Yeah. So, I'm watching also Adobe. I'm going to see how it hangs on in this area. Maybe it gets up to 349 to 354. Crowd we traded the other day was a great trade. We bought it like at 133. I kicked it out near 135. I'm still seeing if it could hang on in here, maybe for a pop up to 136.20 or so or further. Meta, I'm going to watch. It's tight channel. See if it gets above 240 or so. If it could pop, maybe gets back up to 244,
So Kimmy, even with a gap up this morning, because Kimmy tends to be very mean reverting in nature, particularly on gap ups. I've noticed, kind of just trading with you.
Right.
Even with a gap up, you're still leaning long. You're not looking to fade it.
Not right now, but that could always change. I always have
good color.
Things in my pocket.
I like it.
So you've listed like 5 to 10 stocks that you're watching. I can't help but notice a theme, Kimmy. They're all tech stocks or communications. They're all growthy names.
Hey, listen, I was short low the other day, and then I realized Home Depot was reporting and I had to get out. And so, I made like 20 cents, but I said, well, I don't know what's going to happen. Would have been a great short. You know what I mean? Yep. Eli Lilly, I shorted Friday. Oh, wait, I shorted MasterCard. I made $1 yesterday. I shorted Clack, made $1. So I do a counter trend trades too. So, in the room, I don't always recommend them because they're aggressive. I'll say, this is what I'm doing. Shorts are hard. I don't recommend, I could say, this is what I'm doing. Doesn't mean you have to do this. Like yesterday, Amazon popped. We traded it for the long. I took a quick short also as well. So I'll take a quick short down. I'll do, mean reversion. I took a short at 114 down to 113.20. I'll trade like that, but that's not for everybody, right?
All right, Spencer, put in the show notes where everybody can watch Kimmy trade along with her.
So I just dropped a link to Kimmy's morning note, and then within their morning note is the link to where you can watch her, and she's live. When do you go live? Like 9:30 or like right now?
No, right now, but
right now.
Someone has any relation to Kirill Sokolov? No, Sam, no relation, but he's a very intelligent man. I wish I was.
All right, Kimmy, go hop into your room. People are winning. Thanks a lot.
Trade him well, Kimmy. Trade him well.
Bye.
All right. It is 9:21. We got 9 minutes till the open. Let's do our hot corner segment. This is a daily note that I also goes out every day. I get it, I read it, and highlighting some of the biggest insider trades happening across Wall Street, and we've got a nice little bumper for it. So you guys ready for that?
Ready.
All right.
Hot corner. So hot right now.
Props to Izzy for that one. That's
so hot.
You guys like that? You like that? All right, Straza, what do you got here this morning?
Feeling so hot right now. So throw up my screen, Spencer, for me.
We're up.
So
throw it up.
We got a long list today, but there's only one that really deserves talking about here, and that's Occidental up top. We've been covering this one nonstop, so I think it makes sense for our inaugural show that we do have the latest purchase from Warren Buffett and Berkshire Hathaway in Occidental. Listen, it's not huge. 125 million really pales in comparison. His total stake is, I think, upwards of like 15 billion now. He owns roughly 300,000 shares, or 300 million shares, I'm sorry, of the outstanding 900 million. When you include his warrants, which are slightly out of the money, but they've been hovering in and out of the money in this range for over a year now. If you include those warrants, you get an ownership percentage of about 33%.
And he can buy up to 50.
Right. So he could buy up to 50, but also we had some really interesting comments at the annual shareholder meeting from him this year. He was obviously asked if he was looking to take full control of the company, and it was a resounding no. He's not. So I think that makes sense, right? He did get the FERC approval for 50%. He doesn't want to take over the whole company and buy it outright, which we've been hearing rumors about for over 12 months now. So maybe we move from 33% to 50%. That's still a lot of buying pressure. Why does it matter? Because he has literally been support in this stock going all the way back to the first quarter of last year. We've marked up this chart for when and where Berkshire has purchased stocks. All of these yellow circles signify new Form 4 filings, right? And then we've listed them all out on this table back here, where we're calculating his total ownership percentage.
Every time it dips below 60. I mean, it's really that simple. And it just dipped below 60, and we were wondering. I'm like, I wonder if Uncle Warren is getting involved. And here, sure enough,
like clockwork, right? So the last time we saw him out here buying was in March. We had two filings back in March when the stock dropped below 60. We got a little bounce and then faded back below 60 again. Now he's out here again with his latest Form 4 just last night. So listen, the playbook has been to accumulate this stock where he's accumulating it. It's just, we need this top to end up being a failed top and then eventually resume higher. So we haven't been wrong to buy the stock here, but we also haven't been rewarded with it hitting our price target yet. I think 57.50 remains that line in the sand, and we can be buyers as long as we're about there.
Yeah, I mean, dude, every time it dips below 60, he's getting involved. Anything else stand out in the hot corner? I got it in front of me right now, taking a look. Anything else stand out on this list? A lot of Form 4s is one thing, right? A lot of Form 4s. Insiders from Tyson Foods getting involved. There's B. Riley Financial again. That co-CEO and chairman keeps buying, right? Like this is the guy. This is the Riley guy is buying the Riley company.
Yeah, I
Um,
think something strange is going on there. They're trying to build their stake for some reason. He's been out here buying a lot since last year. When I go down this list, just like you did, JC, just there, I'm looking at the reporting person. I'm looking for either a big name like Warren Buffett or CEO, CFO, right? So this one definitely stands out. This P3 Health Partners, PIII. You got the CEO and CFO coming out. Didn't purchase the most, significant amount, 334,000 between both of them. I would also look at something like, president and CEO.
Hold on, this is important. This is important because Straza and I argue constantly, or debate, I should say, about which filing is more meaningful. If it's the CEO buying, Straza, with his financial and CPA background, would claim that the CFO, when the CFO's buying, he's the one that knows the financial. So that's more important. But how about when you got the CEO and the CFO buying? I mean, come on.
Yeah, that's great. The problem with me about the CEO is kind of twofold, right? They have more money. So therefore, I need them to purchase more for it to matter to me. All things equal, I'm going to assume that the CEO has more money than the CFO. And secondly, it's their job as the leader of that company to step in and buy shares sometimes, right? So they might buy shares maybe when they don't want to put a vote of confidence in the stock. The CFO is only going to go out there and buy shares on the open market if he thinks he's going to make money. It's not his job to do that, and act like the leader of the company. I also think you have to be very careful with materiality, right? So when I'm looking at something like Warren Buffett, I'm saying, 125 million is really not that much.
Drop in the bucket.
Yeah, it's dropping the bucket for him. This is not a big deal. When I see a CEO or a CFO or one of these executives drop $7 million, $12 million, that's a lot of money, even for an executive, right? And you can get cute and look up the net worth of these guys, but I don't even think that matters because it really comes down to liquidity. So it's a tough game to play. You do have to use a lot of judgment and subjectivity when you look through these lists, but we've gotten good at it over the years because we're staring at them every day.
Yeah, in the Buffett thing, it is appropriate that on our inaugural show, our morning show, first episode ever, of course, Uncle Warren buying Occidental Petroleum. Classic.
Yeah, Brian Shannon, Kimmy Sokolov, and Warren Buffett. It's like the hat trick.
There you go. I like
Alfonso is telling us that Deere and Visa were also notable to him because you had some Congress people.
We call them congressional YOLOs. We got this guy, Jonathan. What's this guy's?
Jonathan Jackson. I don't know.
Jonathan Jackson. Never heard of this gentleman. But he is in the House of Representatives, and he bought Visa, Parker Hannifin, and John Deere. I guess these reps don't make that much money because he didn't buy much. $15,000 to $50,000 for each stock, so not a lot, but. Like Straza was talking about before, how the CEOs tend to have more money than the CFOs. The transactions coming from senators and House of Representatives, particularly the representatives, they don't have as much money. So they're not going to be monster transactions. Some of these senators have more loot, but
our materiality threshold is far lower for the Congress people, as it should be, right?
Yeah.
And again, I think you get really cute if you're trying to play that game of who has more money and who doesn't, and assess it that way. So we keep the threshold down to 15,000, like you see here. That's how
the Uncle Warren transaction takes the cake on the initial episode.
This list is from the Hot Corner. I mentioned at the top of the Hot Corner is a free daily note. If you want it, boom, scan the code on your screen. You will get it every day. It takes maybe 30 seconds to get through. It's quick, it's digestible, and it's informative. Right, so get that
to not read it every morning to see what the most important transactions of the prior day are. In my opinion, is irresponsible. We'll drop the link in the show notes as well.
For sure. All right, it is 9:29. We are about to open here, which is going to be fun. I was like hearing that opening bell on my screen. Let's wait for the market to be open for a few minutes, and then we'll talk about what's happening, after the bell. But we skipped over
at least 5 minutes. Let things shake.
Yeah, that's fine. That's fine. We got to get that first candle, right? So there's the bell. So let's do some analyst action here. We have a segment that we're calling Street Moves, where we highlight some of the biggest ratings, upgrades, downgrades, initiations, et cetera, from analysts on the street. So let's get that up there right now, and let's see what we got. Where's my video? There it is. All right. So just like these guys have their own thought process for thinking about insider transactions, I have my own thought process for thinking about ratings. I've been looking at them for a few years. There are way more ratings than this today. Every day there's probably like 50 to 100 analyst ratings. The vast majority of them don't mean anything. So this table that you're seeing right now, I've gotten from our good friends at the Trade Exchange. I'll drop a link to that as well after we're done here. It's from their morning note. Okay, so the vast majority, JC would tell you all ratings are meaningless. I will tell you only most ratings are meaningless. Okay, these are some of the ones that are least likely to be meaningless today. So here's what I look at. I look for names that I recognize, right? So this morning I recognize a name like APP, right? AppLovin. I recognize a name like IQ, Tencent Music, Win. Okay, so that's the first thing. Then I look for firms that I recognize, analyst ratings from sell side firms that I know. Okay, so that's usually just the bulge bracket banks, right? Goldman Sachs, JP Morgan, Morgan Stanley, Bank of America, Citi, Wells Fargo. I don't even know how many shops there are, but the vast majority of them don't have enough.
Fewer and fewer every day, my friend.
Sure. The vast majority of them don't have enough influence to move stocks. The 5 or 6 that I named, pretty much they do. Okay, so I'm looking for stocks I recognize. I'm looking for firms that I know are influential, and then I'm looking for any patterns, any trends. So, like for example, I see an upgrade today on IQ, right, from Outperform and Citigroup. Well, I know that IQ reported earnings yesterday. Okay, so that upgrade doesn't mean a whole lot to me. Okay.
Well, no, but Spencer, isn't that just a standard thing? Analysts will often come out and review their reports following an earnings report. So you'll see a flood of new analyst upgrades, downgrades, whatever's, initiations right after an earnings report. No?
Yes, exactly right. But this upgrade today is not the analyst making a call. It's the analyst reacting to news, and the news is what's driving the upgrade there. So then the last thing I look for is any sort of trend. So like for example, we have a Barclays upgrade to Wynn Resorts this morning, right, to overweight. Well, that's interesting. I wonder if maybe Barclays also downgraded. A lot of times firms will upgrade and downgrade competing companies that put on the compare trade, so to speak, in the same day. So do we have any peers, any competitors in this table? I don't really see any today.
No, but let's talk about that. I love that point because this drives me crazy more than anything. I saw it last week where an analyst came out, upgraded Delta Airlines to a buy, and then downgraded like United, American, Southwest to sells.
Yeah.
Those stocks are going to move together.
You're right.
I mean, if one is a buy, they're probably all buys, maybe less so of a buy, right? But you're not going to tell me American's a buy and Delta's a sell. Like when you see something like that, I just, that's on my do not pay attention to list. So
that's interesting. Okay. And then the last thing I look for is I just sort of ignore neutral ratings. Buys interest me, sells interest me, neutrals don't interest me at all.
Jason, would you love the upgrade to a hold?
Yeah, upgraded from a sell to a hold. It's like, what do you mean hold? You told me to sell. And I like it when they upgrade Weight Watchers to overweight. That always cracks me up too.
All right. So anyway, these are some of today's top ratings. And generally speaking, analyst activity will only move stocks when there is a news vacuum, when there's just not a lot going on out there. Seeing as how we are still in earnings season and there's a bunch of macro stuff happening, these initiations or these upgrades or downgrades are probably a little bit less likely to move stocks as they would, say, the week of Thanksgiving, for example, or like the middle of end of July or end of August. But just some names to potentially have on your radar today. Thank you to Trade Exchange, by the way, for this table. It's freaking fantastic. Trade Exchange is what we use. At least the two of us who actually care about news is what the two of us, Straslin and I, use to get our news. And I highly recommend checking it out.
By the way, I use the Trade Exchange for things that are not news. I use it for the data. Okay. I use it for the insider transaction. I use it for a lot of reasons. I don't have to worry about quote unquote news. I'm more interested in how the market reacts to that news.
JC just likes to just check in and hear Milton's voice every now and then.
I do like Milton's voice.
Milton will be on our show one of these days coming up here. And then I want to mention, so I got that graphic from the Trading Exchange Morning Note, which is honestly, for my money, the best morning note that I've really ever seen. It's comprehensive and it's out every day at like 7:15 a.m., which is insanely early to have a note of this quality out by. So thanks to Milton, and those guys are awesome. And there's a QR code on the screen. I highly recommend you check it out. They are fantastic. We'll be integrating them more into the show as in the coming days and weeks.
Milton will be on as our sideline reporter to talk about some of this stuff, because just like you and me, Spencer, he's so plugged in watching this stuff all morning. So we'll bring him on for segments like this. Can I just talk about AppLovin right now? Because how good of a name is that, first of all? For a company, AppLovin, and this base is just beautiful. If you want to show my screen quick.
Oh, I do.
Whether it's a lot of this stuff, earnings has become, so they reported earnings just late last week, right? And you got this monster gap up above these pivot highs, right, on the earnings beat right here. And look at that volume, right? So up 23%, last Thursday, resolving from this base, right? So whether it's, earnings as the catalyst, some sort of analyst upgrade, whatever it may be, buy the ones that are resolving higher. And here's an example of one that failed. This is C Limited, and we're talking about how this is a big week for retail, right? C was setting up in a really nice base here. You could see it. And earnings, again, were the catalyst, but in this case, for the base to fail, right? So this is just an example of one that we would be buying versus one that we would not. C did not get it done, did not complete this base. AppLovin very much did get it done with a breakaway gap out of the space. So.
Nice. All right, it is 9:37. Strazi, you want to whip up some or just pull up some, some SPY, some Qs, whatever it is on your mind, and just take a look and see how things are shaking out here for the first
so
minutes.
Let's talk about the tape quick.
Yep. All right, where's my talking the tape graphic? Come on, graphics guy. Where are you? Oh, it's my other folder. Talking the tape with Steve Straza. Come on, now there we go.
All right, so we're 5 minutes into the trading day, about 7 minutes in right now. Basically, I have a dashboard that I'm going to look at when we do this segment. It's going to show me all the sectors, all the industry groups, all the components, and we'll just talk about what's moving each morning. This morning, you're getting a very much risk on, cyclical tape, where financials are leading up almost 1% on the day. I'm looking at equal weight sectors. So if you're following along with the spiders, they're not going to match exactly. Industrials up 0.75%. Energy and materials up about 0.5%. That's what I like to see here. Then you got defensives, healthcare, utilities, rounding it out as the laggards today, flat to slightly negative. So for the most part, the important groups, the offensive groups are higher, even tech up 0.5%. If we drill into these groups a little bit, right? So when I see financials leading, my first question is it the banks? Boy, I really hope it's the banks, right? If I'm a bull right now, banks have some catch up to play here. And they at least need to stop falling. So banks are the big leader from an industry group perspective. I got regional banks up, 1.25%. If we look at the popular index, which is the SPDR Regional Banking Index, everybody's been watching, that's KRE, up 3.7%. Some of the leaders, I know Western Alliance, I believe, came out with an update on, how much deposits they're losing.
Yeah, I was going to mention WAL and PacWest are actually the two of the biggest pre-market gainers, or they were the biggest pre-market gainers today. I think it was a deposit update, but when you say like Western Alliance is up, 13%, it's like $3.
Yeah, it's from a very low base, of course, right? But we need these stocks to stop falling. I don't love the fact that it's the trashiest names or the weakest names leading today's rally, but let's talk about one that stands out. This is New York Community Bank Corp. They were out here buying some of the failed banks' assets, right? Well, they were buying the deposit and the loan books recently. This doesn't look like most bank charts right now, right? I could draw a little base here in NYCB, breaking out above those August highs. This almost looks like a tech stock, doesn't it, JC?
Can I just tell you something? This is the first stock that I ever bought.
NYCB?
It used to be NYB. It used to be New York Community Bank. Our first stock, JC, ever about fun fact. Fun fact. I think that's a very fun fact.
It's all coming together for our inaugural show.
How about that, huh?
So, but this one looks nice, right? You can play it against the August highs. And if and when these bank stocks finally stop falling, right? And this, volatility kind of fades away. You want to buy the leaders. And this one really, really stands out as a bank that I would actually consider buying. And I can't say that for 99% of them right now.
Wow.
That's all I got.
All right.
Throw in the Staples chart. I think this is
I
really
know
important.
JC's chomping at the bit here. I know. I can see. Okay.
And just to respond to the chat here, Paul,
Yeah.
KRE not bullish, opposite of bullish. That is as bearish as it gets. We're staying away. If you do want to get cute and mess with these banks, though, I would do it via the index or something really strong like NYCB.
All
Yeah,
right, JC.
yeah, for sure.
What do you got?
I think bigger picture, I think the strength that we've seen in Staples, on a relative basis, I think stands out a lot. If we start to see Staples breaking down again relative to the rest of the market, this sort of, this rally that we've seen on a relative basis, if this resolves lower, I think that's characteristic of strong markets. You don't want to see Staples outperforming. You want to see Staples underperforming in a bull market. So that's what I'd be looking at there. And then finally, the US dollar. I think this is the catalyst. This is what we're looking for. A breakdown in the US dollar, I think, is a need, not a want. If the S&P 500 is going to break out higher, if this bull market that we've been in since last summer is going to resume higher, these consolidations resolving higher, I have a very strong suspicion that needs to happen in a weaker dollar environment. So I'd be watching the US dollar index. If we start breaking 100 on the US dollar index, I think it's very bullish for stocks. I think it's bullish for precious metals. I think it's bullish for Bitcoin and crypto assets. If you start to see the dollar index holding above 104, I think it's a problem for all of those. How do we feel about that?
Yep. Listen, Staples have been leading, right, for 3 straight months now. I am looking at, if you want to throw up my screen here, I think the equal weight ratio gives you a much cleaner picture. And we have these pivot highs here from last year, last summer. And, if Staples take this out on a relative basis, you would expect, a leg higher. And that's probably not happening in an environment where the broader market is trending very well. So I want to see this ratio fail here and roll over if I'm bullish.
All right. I know Alfonso said he had some Staples charts. I'm not sure.
It's probably this one.
Probably that one. Okay, cool. Just making
I
sure.
mean, listen, Staples names have been really hot. We did the sugar thing, right? All these sugar names, whether it's Pepsi or Mondelez or Hershey. A lot of these Staples names, Monster Beverage, just ripping to new highs.
Yep.
There's a lot of strength there on absolute terms.
It's the sugar trays, Strazzy. You got Sugar Futures, Mondelez, right? It's all the sugar stuff.
Coke, Pepsi.
Yeah. You got, by the way, you got the European Coca-Cola also breaking out, right? So if you're looking for, sugar exposure outside the United States, you got that too.
Did you guys, I don't know if you guys saw this, but Pepsi in their earnings report, 2-3 weeks ago, revenues. What was the stat? It was revenues were up 11% year over year. Sales volume, the amount of products sold, flat.
Right.
Flat.
Because they're showing that in nominal terms. Like, these companies eat inflation. They kill it in an inflationary environment. You have no idea that they're giving you less chips or putting in a smaller bag or raising the price 25 cents. Nobody cares. Nobody notices. You go to the grocery store, you buy what you're going to buy anyway.
You know what?
Best place to hedge out there is staple stocks. Period.
If Coke or Pepsi were to start putting less soda in their cans, nobody would even know.
Oh, they probably already have.
No, they probably have.
They definitely already have.
Nobody would know. That just occurred to me just now. Okay, it's 9:45 here. We got about 15 minutes left in the show. We want to do a segment where the chat can ask some questions. So let's do that now. We're calling it from the crowd or from the chat. If you have any questions in the chat, I know there's been some already. Drop them in there and let's talk about it.
From reporting.
Hold on.
Sorry, I'm getting used to this. But no, I was just finishing a thought. Like, these big multi-domestics, or these, these big international conglomerates, they are also benefiting from the falling dollar the past 2 quarters, right? So when they translate those sales back to US dollars for reporting purposes from overseas, that's having an impact too.
You're such an accountant.
It's true.
Well,
Such an accountant. I'll
really
take the
good
first
point.
question. I'll take the first question. Will this be a daily show? Yes.
Hell yeah.
Got that one.
Wait,
What?
Straza, do the thing. The
Oh,
Do that thing. Bow, 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 bow.
no. Okay.
No, it didn't work.
are you hearing it?
No, we want the bow, bow, bow.
The, all right. Whatever.
Too loud, too loud, too loud. We got to work on that. We got to work on that.
Get better at
Oh gosh. All right. Okay. Paul Hodgson, Straza, any options plays for Meta or I'm not
You know, it's been one of our best options trades this year.
Yeah.
Sean put a trade on Meta. I look at that stock here, and I mean, honestly, I would rather be buying its peers that are playing catch up now. Google and Amazon, the other mega cap tech names. I mean, listen, Meta, it's already moved so much. I think you could keep riding it, but I think there are better opportunities with cleaner levels, and I can define my risk more easily in something like Google or Amazon right here.
Yeah, and we just put on the Google trade last week.
Yeah.
You know, and we already took half off the table. It's a free ride till December on the Google calls. So, you know, it's a few days. I mean, it really started taking off as soon as we bought it. Like sometimes that happens. And by the way, the best trades ever, that happens. It does happen. We literally put on the call option, volatility was low, and it just took off. Like it does happen.
And,
right.
And what is it, JC? I mean, you always say this to me. The fact that these big cap tech names continue to be our best trades is information, right?
Yeah, our bet. Think about it. I could take our 3 best trades of the year. Sean, correct me if I'm wrong. It was Tesla in January.
Yeah.
Meta, I think we put it on in February, maybe early March, if I'm not mistaken. Now the Google's working out great. Like, are you noticing a theme here?
Yeah.
You know?
I think there might be a home builder.
By the
mix
way,
in there, but yeah.
Sean's out of Meta. They had the 190 calls. I'm sorry, not with the 190 calls. That's someone else. But
No, Sean is out of Meta. He
Sean's
is out.
Sean's out
I
of
am
Meta.
not.
Yeah.
I am not.
Okay. Yep.
I still have till next month.
Yep. All right. A couple more here. He also says don't sleep on Lennar.
True, Leonard. The homies have done very well. Good call, Sean. You're right.
All right. Sam Biggles. This is I like nice vague questions like this one, right? What tips do you have for traders for effective daily routines? That's a great one. That's a great question. Routines. Do you guys even have a routine? Do you guys just roll? Do you just roll out of bed and?
Well, think about it like this, Spencer. Me, Straza, myself, a lot of our colleagues, like this is what we do. So like our routine, like I get asked, JC, can you give a presentation to my financial advisors or whatever, next week? I'm like, yeah, sure. What do you want to talk about? Can you send me a deck? I'm like, I'll send you a deck 5 minutes before, because our whole lives are, sort of preparing for a presentation or a morning show or whatever it is. Like, what do you want to talk about? You want to talk about energy, precious metals, Brazilian lithium stocks? Like, what do you want to talk about today? Like, we're generally prepared to discuss any of these topics. You want to talk about insider transactions, anything outside of news. I can't really help you on that one. But in terms of daily routine, I think that I've spoken to a lot of people and it's different for everybody. Some people like to work out before, they get going in the morning. Some people don't have time to do that. Some people roll right out of bed and get right into the markets. That's me. Some people have kids and are feeding kids before the market opens and things like that. I find myself in that situation as well. Spencer, Israel, and Straza do not have kids. So if you find yourselves feeding kids at 7:30 in the morning, you probably woke up in the wrong house. So I think that everybody should sort of figure out what the best routine is for themselves. But I think the bigger point that I'm trying to make here is have a routine, right? Like, get in the habit of doing certain things so that you're mentally prepared and you're not kind of like all over the place. I think just having one, I think is a big deal. Straza, how do you feel?
I think you'll find that you do have one. I don't love the whole like Nazi, like, hey, wake up at 5 a.m., do yoga, then meditate, and like everything's scheduled out. I don't do that at all, but I find myself waking up and doing very similar things each morning without meaning to, right? And I think the question was more geared towards trading. Like JC and my days are filled more with analyst routines, right? And research routines. Back in the day when I was trading a lot more actively, I would keep a journal every morning. You want to write about, what's moving in your portfolio, how you're managing what you're buying and why you're buying it, right? Something that you can go back to and look at and judge yourself later on, right? And the other thing I would say too is if you're trading, make sure you're passionate about it and the routine will fall into place, right?
Yeah.
You'll be spending more hours than you ever thought. So I would ask you questions like, when you go on vacation, are you checking your phone and checking what the market's doing? When you're out on the golf course, are you constantly checking? Like, you want to be in it and so passionate about it. And those are the traders who I think will be successful.
I don't think there's anything wrong with that, by the way. People are like, JC, why are you writing a blog post on vacation? I like writing blog posts.
Yeah,
like
right.
if I'm on vacation, why should I not do something that I enjoy doing? I like writing a blog post. JC, it's Saturday morning, you're on vacation. Why are you looking at charts? I like looking at charts. I enjoy catching up on what the market is doing. I'm not reading the newspaper. Like that doesn't mean anything to me. Like that's like for like to put like for dogs, like so dogs can do their thing. Like that's what newspapers are for. For me, I get my information from actual data, the things that actually matter. And I'm just gonna, I run the show around here, I suppose. I guess we all do. And I want to show a chart. I have a mid-cap Brazilian lithium company
Right now.
right now that I want to talk about.
Yeah.
Because it's recess, right? I don't know if you're gonna play the jingle. You want to play the jingle there, Spencer?
Oh yeah. Are we into recess? All right. Here's recess.
The end of every show, we can talk about anything we want, right? This is the end of the show. We can take questions if we want.
Yeah. No. The whole point of recess was it didn't have to be about the stock. Of course, your recess is about some lithium stock. But all right.
Well,
go.
I like charts. Getting back to my earlier point about how if I'm on vacation and I want to look at charts, why should I not do something that I enjoy doing? And this is an interesting Brazilian lithium stock. It's a mid cap. I like $40. That's the big one for me. Completes this base. I think below 40, I think you leave it alone, let it continue to dance. But if we're above 40, looking for a 25% move to the upside, if you're looking for some Latin American exposure in lithium, I think this will get you done. What do you think, Straza?
I like it a lot. I'm a fan of this stock. It's been a secular leader since coming public, which wasn't too long ago, but continues to just trek to new highs on both absolute and relative terms. I would also say this is a space that's under pressure right now, right? So the fact that this guy is breaking out to new highs, while the metals and mining ETF looks the way it does, or rare earth metals or lithium indexes look the way that they do, I think is very bullish, right? So again, it's that beach ball effect. When that pressure comes off of the group, you would expect this one to enjoy a nice leg up from here.
Take a look at LIT, right? LIT's lithium ETF, struggling. Yeah. Look at SQM, which is a Chilean lithium, again, struggling. And then you look at this one, and it's like, what's the difference? And then because this is a smaller company, this is a $4 billion stock as opposed to something like SQM. It's a $20 billion stock. It's not that huge, but you look at a $4 billion stock. If institutions are buying, they can't hide. The relative strength has nowhere to hide, right? Because these institutions are so massive. This is a tiny $4 billion stock. This is nothing. So they're going to bully it around. They're going to knock it around. So when you're seeing the rest of the space struggling, and this one in particular going out at new all-time highs, man, it stands out above 40. I think you got to take it into consideration. Target up near just below 50, 25% upside, not bad.
And listen, lithium is a secular trend right now, right? Along with autonomous vehicles. So this is the kind of stock I wouldn't mind owning over longer time frames. Buy the strongest one, buy the industry leader. And this is a space that should continue to grow. Elon Musk was on talking about it all last night.
So I'm going to move on to my next topic here with our daily recess and talk about the Miami Heat. Tonight, game 1 of the Eastern Conference Finals. Those of you who are new around here, I grew up in Miami in 1988. I was at the first ever Miami Heat inaugural game. In fact, that night, we found out that my mother was pregnant with my little sister. Talk about coming full circle. I was there at the inaugural Miami Heat game against the Clippers. And by the way, here we are in the inaugural morning show talking about that. So I'm a Heat fan from day one. Coming up against the Celtics tonight. Nobody's giving Miami a chance. I look at ESPN analysts like I look at sell-side analysts when they're at consensus. I'm happy to take the other side. In this case, it works out in my favor. I think Miami can stop Jason Tatum. I don't think that's a problem at all. I think the big question mark is, do the others step up? Jaylen Brown, Smart. Do the others step up and take over the game? They have the ability to do that. Can Miami stop those guys? That's the question. And I think that's what's going to separate the winners and the losers over the next 6 games. Miami in 6.
Wow. I mean, listen, if you guys are shooting, if you're making those threes, hard to beat. I'll be rooting for Miami tonight. So let's see it.
I love how like you're like Mr. South Florida now. Like you go into Heat games. I mean, you still root for the Knicks, right? Can't hold that against you.
Of course.
But I like how you're look at your jacket. I mean, I love it, Straza. I love it.
Have a great time there. So let's talk about Elon Musk before we go. We got 5 minutes.
I had a feeling that was going to be your recess, Straza. So yes, he gave this interview to CNBC. You watched it. Tell us about it.
Yeah, I'll read some clips. Listen, it's really, regardless of what you think about the man, listening to him think and speak is always just something I love to do. He's brilliant. He has ideas. He's not afraid to be honest about how he feels. Let's talk about it. First, the Fed. He said his concern with the Fed is how they act with latency. I mean, JC, you talk about this all the time. He said they operate on stale data. They were slow to hike interest rates, and they will be slow to lower them. Honest take there, right? Then on the work from home dynamic, he hates it, which is hilarious.
Shocker.
It's just a productivity issue for him. He's a highly productive person. You could hear it in the way that he talks about.
He sleeps at the factory.
Right. So he said people should get off their moral high horse with this work from home bullshit. That I got a giggle off of that one.
Wow, that was his quote.
Yeah.
Wow.
Yeah. Layoffs at Twitter. David Faber. Also, kudos to David Faber. I mean, he is as good as it gets in the business when it comes to interviewing. He did a great job. I love him. I think he's one of the best anchors out there in financial media.
His book is also really good. When the Roof Caved In.
Yeah.
It's about the housing crisis, 07-08. David Faber's book.
So basically, Faber was saying to him, like, are you hearing from other tech CEOs? Are they thanking you for the way that you laid off employees at Twitter so quickly? Because it kind of opened the door for them to do similar things. And Elon kind of laughed, chuckled a little bit and said, yeah, I have heard that. But you remember when he walked in there, I think he's just slashed like 40% of the workforce in like the first week. And, when you make cuts that big, it's kind of impressive that the company was still able to run the way it did. And now he was joking and saying, we're probably going to have to look and hire some of those people back. But he just explained like a businessman, we had to get the run rate in check and fast. And the only way to do that was, show people the door. And now that we're sorting things out, we'll go back and rehire some people. So I thought that was good. The big one that's in the news is he was asked about why do you tweet things that are controversial? It can't help the share prices of your stock. He said, I'll say what I want to say. If the consequence of that is losing money, then so be it.
If the consequence is him losing money, but very often it's also other people losing money too.
He doesn't care. So that's what he said. AI seems to really scare him. He had some really strong comments. He is not happy with the OpenAI guys. He said, OpenAI wouldn't exist without me. I gave them $50 million. They have since had a falling out and don't seem to have a great relationship. Elon always saw this as a scary technology that he wanted to kind of control and keep under wraps. And they've kind of taken things in a different direction. And, he sounded a little bit regretful that he didn't take any, governance or control with his initial investment. Yep. He also said Tesla will have a ChatGPT moment in the next few years, talking about autonomous driving hitting by end of year. And then the one that really stood out to me was, he was asked about, is his end goal with Twitter disrupting the financial system? And after a very long pause, he said kind of, maybe not, kind of heed and hawed on it and mentioned how PayPal is really disappointing to him. I think he made some sort of comment how like PayPal is only half of what it could be. And I think what he meant there is it has the payments, but there's no social aspect to PayPal, right? So I think he might look at Twitter as maybe a potential combination there. And that would be really interesting.
Can somebody tell me what this Princess Brides thing is? Is this a movie I need to watch?
That's what he said. That was his comment about not giving a shit about what he says or who he pisses off, I think.
What does that have to do with Princess Brides?
He's a weirdo, man. He's really
weird. He was referencing this moment in the movie, at the end of the movie, this famous scene with the Mandy Patinkin, but he didn't get the quote right. I'm surprised you've never seen that as a child of the 80s. I would have assumed.
That's not a new movie? It's an old movie?
Oh yeah, it's like 40. It's like 30 years old.
All right, I got to step up my Princess Bride game. Apparently.
Yeah. All right.
What was the quote again?
It's my name is Inigo Montoya. You killed my father. Prepared to die. I think that's the quote. And he like tried to quote it, but whatever. Neither here nor there. It's 10 a.m. We got to hop. Before we go though, I wanted to thank our guest Brian Shannon, Kimi Sokolov, and you guys obviously for joining us today. Once again, want to put this link up on the screen, the QR code to join All Star Charts Premium. That's where you get access to all of JC and Straza's research and all the research from the firm there, and all their charts and all their chart books and all their conference calls. It's fantastic. So check that out there. That's pretty much it. This is our first show, so like we didn't really know what we were doing. We're gonna kind of figure it out on the fly. I thought it went pretty well. Thanks to everyone in the chat for hanging out with us. We appreciate that. If you liked the show, if you'd be so kind to just hit that thumbs up button on YouTube, we'd appreciate that. If you're watching on Twitter, then hop on over to YouTube and hit that like. That would help us in the eyes of the mysterious, all-powerful YouTube algorithm. And that's gonna be a wrap. So everyone have a great rest. Oh, stay tuned. We got some more stuff coming today. We got let's see. What the Fick with Ian Cully coming on in an hour and a half from now. We got Straza doing the hot corner at 1 o'clock, and then Sean and JC doing the options trade of the week at 3 p.m. Eastern time today. That's coming up on Stock Market TV. Did I miss anything, guys? I don't think so.
Honestly, first show, not bad. Could
First
have gone worse. Could have gone worse.
Thanks for joining us, everybody. I mean, we're going to get better at this. We're going to have fun out here, talk about important things every morning. So this is exciting. So
yeah, love it. Nice job, guys.
All right, I'm ending the stream.
Adios.